Hello traders, Gary Wagner here just after 1 o'clock in Honolulu, 7 o'clock in New York. It is Wednesday, March 11th, 2020, and this is the Daily Report for Gold and Silver. Interesting times that we're witnessing now with the equities markets and gold again selling off harshly on the same time. If you've read the opening letter prior to watching this video, it is a very unusual occurrence. Now, in 2008, we saw both gold and the stock market decline as we went into the financial crisis. However, when the Fed stepped in, it changed everything. It moved gold higher and stocks. The key difference was stocks kept moving for the last 11 years, and mid-2011, gold hit its record high and then traded lower. So we haven't seen this kind of occurrence before. It is unusual, but today's low came very, very close to our stop. It did not hit it, and we'll discuss pricing right now as we pull up our price board and then to our technical studies. I have been involved with the financial industry for about 35 years now, beginning as a commodity broker. I then became a CTA. I moved into system development, created a software application, began writing books and lecturing around the world, and then doing analysis. In all that time, what we're witnessing over the last 3 weeks is that there was a note by a couple of analysts that said one possible explanation for why gold continues to sell off when it went up last week and stocks continued their decline was that central banks are buying, and that would make gold move lower. They're using that funds to have the available capital to do what they need to do to stave off the coronavirus epidemic becoming a pandemic. Nonetheless, we have gold at $1641.40. It's marking it down about $1.30. It was down about $20+ this morning. This is the low, $1633.10. Now, by no means are we out of the woods, but our stop's at $1631. So at least for now, we've avoided it. If we get this market to form this double bottom, this is today's trading action here. This is the current action that is happening in Australia. If it continues to move off here, I think we could see the market move higher, but only time will determine if that's how gold pricing unfolds in the next couple of weeks. In other markets that we follow, we did have silver trading lower during the morning and afternoon session in New York. It's currently at $16.78. Palladium is currently trading at $22.20, down $8.80 in the aftermarket. And then lastly, platinum, which is still well below 900 at $864.90. And we did have a neutral dollar up a little bit, but most importantly, it's this. The U.S. equities markets, as you can see, a 1,400 point plus decline. That takes the 13% drop that we've already experienced now to 20%. So we are now going deep into corrective territory in U.S. equities. Traders, what is most perplexing is the fact that the initial sell-off of both gold and silver, we have seen that occur on multiple occasions as mass liquidations happen when economic crises emerge or something like the coronavirus. Now, we normally see, if it's Fed intervention to get us out of that, both gold and stocks will begin to move up. In the case of the 2008 recession, they both moved up. However, gold stalled mid-2011 at its record high and then began to trade lower, whereas equities continued for one of the longer bull runs we have seen, approximately 11 years. This is a weekly chart of gold futures, and when we take a close look at it, it's quite easy to see that this is the week the decline really began in the stock market. We saw the typical reaction that we have seen before with both gold and every other asset, so to speak, being sold off, mass liquidation. And so we got this tremendous drop. But typically what you will see if it's not Fed intervention, if it's due to something else, is that gold will recover because typically people will move their assets out of risk on and move it into gold. And that's what we saw last week. Now, what's most interesting is this week beginning, we actually saw it run above 1691. It almost hit 17, I believe the high was 1702, and now is trading on lower. And that is unusual for it to return to trading in tandem to the downside with gold. That's what is perplexing. We are looking at a daily chart of gold futures, and what we can see is this long red candle. This occurred 3 weeks ago on Friday. Then last week, you can see that we basically had the market move higher consistently for every session. We had a very, very big green candle. This, of course, was the emergency announcement by the Fed. A little bit of consolidation, more upside tick, and then we had this doji form. Now, Monday started out most interesting because it actually climbed to the record high above 1700. But as you can see, the following 3 days, Monday, Tuesday, and Wednesday, today, we have seen declines. This candle represents the open or tomorrow in Australia. You can see that it matched the low. It's currently at 1641. Although we are not out of the woods yet, I do feel very, very comfortable that our stop was not hit today. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.